Those pesky Wall Street bailouts, 20 billion here, 20 billion there, and suddenly you're talking about real money. Your money, in fact, used for a giant bailout that's now endangered two of the nation's biggest financial companies. The feds contributed $20 billion to help pay for the marriage of Bank of America, the nation's biggest bank, with the financially devastated Merrill Lynch, the nation's biggest brokerage. But then it turned out Merrill lost another $15 billion last quarter alone, and shareholders didn't find out until after the deal was done. Now Bank of America's stock has nosedived. Stockholders are suing, and some are saying the federal government should have kept its nose out of the deal.
Well, the Fed and the Treasury wanted Bank of America to acquire Merrill Lynch to sustain stability in financial markets. What no one told Bank of America was just how sick Merrill Lynch really is, how large its losses would be, and what kind of liabilities it would bring.
On top of that, Merrill Lynch paid out $3 to $4 billion for early bonuses just before the merger, and Merrill Lynch's CEO reportedly sank $1.2 million into redecorating his office, including a $35,000 commode. When Merrill's true financial picture started becoming clear and Bank of America started asking whether the merger was such a great idea, it went forward, but the feds gave them another $20 billion, plus $100 billion in loan guarantees. The bank explained on an investor conference call.
We just thought it was in the best interest of our company and our stockholders and the country to move forward with the original terms and the timing.
Keeping them honest, we asked former bank regulator Gary Townsend about it. He says it's clear the feds were trying to avoid yet another big brokerage house failure that would further damage the global economy.
The last thing that the government wanted was another catastrophe.
But economist Peter Marisi says the government would have been better off if it had handled the problems at Merrill without making the deal.
Merrill Lynch should have been fixed. It shouldn't have been forced into a shotgun marriage.
The Treasury Department told CNN it did not force the deal, that it was Bank of America that decided to acquire Merrill Lynch, though there's little dispute that the government helped sweeten the deal. Treasury says rescuing the nation's financial system has always been the point of its bailouts. Joe John, CNN, Washington.